Dubai. 0% income tax. 0 capital gains. 0 inheritance tax. Every year, over 100,000 people move here, chasing the ultimate financial dream, keeping every dollar they earn. But here's what the real estate agents, the relocation consultants, and the influencers filming from Lamborghinis won't tell you. The average expat in Dubai spends $40,000 to $60,000 a year on costs that would be covered by taxes back home. Some call it paradise. Others call it the most expensive free lunch in the world. Let's start with what Dubai gets right. There is genuinely no income tax, no capital gains tax, no inheritance tax. The UAE introduced a golden visa program that lets high earners stay for 10 years without employer sponsorship. Free zones offer 100% foreign ownership and 0 corporate tax for qualifying businesses. The infrastructure is world-class. The airports are ranked among the best on earth. And the weather gives you sunshine for 350 days a year. This is what every YouTube video, every blog post, and every relocation company sells you. And none of it is a lie. But it's only half the story. Here's where it starts. In 2018, the UAE introduced a 5% VAT. That applies to almost everything you buy. Groceries, electronics, clothing, restaurant meals, your phone bill, your internet. Then there's the municipality fee. Dubai charges a 5% housing fee on your annual rent, billed monthly through your DEWA utility account. That means if your rent is 120,000 dirhams a year, you're paying an extra 6,000 dirhams, roughly $1,600, just in municipality fees. Add Salik road tolls at 4 dirhams per gate, twice a day, and you're spending another $200 a month just driving to work. Then there's the knowledge fee and innovation fee, which add roughly 15% to your DEWA electricity bills. None of these are called taxes, but they all come from your paycheck. But the biggest invisible tax in Dubai is housing. A one-bedroom apartment in a decent area like Dubai Marina or downtown runs 80 to 120,000 dirhams per year. That's $22,000 to $33,000 just for rent. And unlike most countries, landlords in Dubai often demand the full year's rent up front, or in no more than 4 checks. So you need $22,000 to $33,000 available on day one. Before you move in, you'll also pay a 5% agency commission, a 5% security deposit, a DEWA connection deposit of 2,000 dirhams, and a separate chiller deposit. By the time you get the keys, you've paid 13 to 15% of your annual rent and fees. That's effectively a 13 to 15% move-in tax. And every year, you pay the 5% municipality fee on top of your rent. Add it all up, and housing alone can consume 35 to 50% of a mid-range salary. Then come the costs that are free or subsidized in tax-paying countries. Health insurance is mandatory in Dubai. For a family of 4, expect to pay 8,000 to 20,000 dirhams per year, roughly $2,000 to $5,000. International school fees start at 40,000 dirhams for the cheapest options and go up to 100,000 dirhams for top-tier schools. That's $11,000 to $27,000 per child per year. So let's add it all up. For someone earning 400,000 dirhams, around $109,000, here's what the zero tax actually looks like. 5% VAT on spending, roughly 8,000 dirhams. Municipality fee, 5,000. Salik tolls and DEWA surcharges, 12,000. Health insurance, 10,000. One-child school, 50,000. That's 85,000 dirhams in hidden costs. 21% of your gross income. Zero tax. It's closer to 21%. But the second trap is worse than money. It's control. In Dubai, your residency visa is tied to your employer. Your employer sponsors your visa, which means your right to live in the country depends entirely on your job. If you get fired, you have 30 days to find a new employer, transfer your visa, or leave the country. 30 days. Your children's school enrollment is tied to your visa. Your apartment lease requires a valid visa. Your bank account can be frozen if your visa expires. In 2023, the UAE introduced some reforms, including a 60-day grace period for certain visa categories. But the fundamental structure hasn't changed. You are a guest, and your welcome depends on your usefulness to an employer. And it doesn't get better with time. You can live in Dubai for 30 years and still not be a citizen. The UAE grants citizenship to a tiny handful of people each year, usually investors who've contributed significantly to the economy. There's no naturalization pathway like the US, Canada, or Europe. No social security, no government pension, no unemployment benefits beyond a minimal scheme that pays 60% of your basic salary for a maximum of 3 months. If you get seriously ill and can't work, your visa gets canceled. If you retire, you need to prove you have enough savings or investments to qualify for a retirement visa. Dubai is a place where you can earn a lot, but you can never truly belong. And when you stop being economically useful, the clock starts ticking. Now let's talk about who actually wins and who loses. Take someone earning $60,000 a year. Back in the US, you'd pay roughly 18% in federal income tax, leaving you about $49,000. Rent in a mid-tier city, $1,200 a month, $14,400 a year. Health insurance through your employer, maybe $2,400 a year. Public school free. Total cost of living, around $38,000. Savings, $11,000. Now move that same person to Dubai. Zero income tax. You keep all $60,000. But rent jumps to $24,000. Health insurance, $3,000. International school for one child, $15,000. Municipality fees, tolls, and surcharges, for $1,000. Higher grocery and utility costs, $3,000. Total cost of living, $49,000. Savings, $11,000. Exactly the same. Except now you have no pension contributions, no unemployment insurance, and no right to stay if you lose your job. For a $60,000 earner, Dubai's zero tax is a mirage. But raise that salary to $250,000, and the picture changes completely. In the US, you'd pay roughly 33% in combined federal and state tax. Around $82,000 gone. In Dubai, you keep all $250,000. Even with Dubai's inflated costs, a premium apartment at $40,000, top-tier school at $27,000, comprehensive health insurance at $5,000, and all the fees and surcharges at another $10,000, your total extra cost is about $82,000. But you're saving $82,000 in taxes. You're roughly even on costs, but living in a luxury apartment with world-class amenities. And if you earn $500,000 or more, the tax savings dwarf the extra costs. Dubai works for the wealthy. It's designed to attract millionaires, not the middle class. And there's one more trap that even high earners don't see coming. In June 2023, the UAE introduced a 9% corporate tax on business profits above 375,000 dirhams, roughly $102,000. Free zone companies can still get 0%, but only if they don't do business with the mainland UAE market. The moment you sell to local customers, you lose the exemption. The OECD's Global Minimum Tax Agreement is pushing even further. Under Pillar 2, multinational companies with revenue over €750 million will face a 15% minimum tax, regardless of where they're headquartered. Dubai's corporate tax advantage is shrinking. The zero tax era is ending. So who does Dubai actually work for? The answer is a very specific profile. Entrepreneurs earning above $250,000 who can structure their income through a free zone company. Remote workers whose employer doesn't care where they live, earning above 150,000. Crypto and investment traders who benefit from zero capital gains. And ultra-high net worth individuals who treat Dubai as a tax-optimized base, not a permanent home. If you don't fit one of these profiles, you're not Dubai's target customer. You're its product. You'll work hard, spend your savings on rent and school fees, and when the job ends, you'll leave with less than you came with. Dubai's zero tax is real, but it's not free. The money still leaves your wallet. It just leaves through doors labeled rent, insurance, school fees, and hidden surcharges, instead of a door labeled income tax. For the middle class, it's a lateral move at best and a trap at worst. For the wealthy, it's a genuine financial advantage. The question isn't whether Dubai charges zero tax. The question is whether you're rich enough for that to matter. Because for most people, the zero tax trap isn't about paying nothing. It's about paying everything, just with different names. If this changed how you think about Dubai's tax-free promise, subscribe and hit the bell so you don't miss our next deep dive. We're breaking down tax systems around the world, separating the marketing from the math. Drop a comment. Would you still move to Dubai after watching this? We read every single one.